Hello and welcome to Market Masters. I am Shail Bhatnagar and with me is Sakshi Batra. Market Masters is BTTV's show that brings you the finest talent on Dalal Street, with whom we discuss the way forward in stock markets and of course where and how to invest profitably. You get to meet top-notch professionals who have a pulse of the market and have been with stocks, bonds and equities over the past 3 decades. Today we have a special guest for you, Mr. Nilesh Shah. He's the Managing Director of Kotak Asset Management Company over the past 8 years and has a fantastic grasp on both sides of the market, both equity and bond. Over the last 3 decades, Nilesh Bhai has worked with Kotak Asset Management Company, Access Capital on the sell side, and 2 other asset management companies, ICICI Prudential and Franklin Templeton. Seldom does wisdom rest so easy and so effortlessly as it does on Nilesh Bhai's shoulders. And he's also the first port of call when it comes to understanding how markets are likely to behave. Welcome, Nilesh Bhai. It's such a pleasure to host you again.
Thank you, Shelby, for those kind words of introduction.
Okay, we have lined up a lot of difficult questions for you, Nilesh Bhai, and that's because the markets are in a flunk, and I'll tell you why. There is inflation rearing its head in the US economy, and there is deflation coming into the Chinese economy. And here in India, we are right here in the middle, down 4 weeks in a row, and sentiment at the moment seems to be really difficult for the bulls. How do you gauge this market globally, and where do you think India is placed?
So, Shelby, globally, we are seeing many dark clouds. In US, on one side, inflation is higher than Fed's estimate, and hence they have to raise interest rates. But to control inflation, what is most essential is to take away liquidity. And here, Fed has been grudgingly taking away liquidity, which is why market is expecting rates to remain higher for longer. But if rates remain higher, there is a problem with student loans and credit card loans. US economy is about 7 times bigger than India, but their credit card loans are 40 times bigger than India. And their student loans is 90 times bigger than India. In fact, all the loans borrowed by Indians, housing, auto, personal, is about $825 billion, half of what American students have borrowed. So clearly, whether it's US, Europe, China, Japan, they are all having one problem or other in terms of inflation or growth. When we compare to them, Indian economy is in a reasonably good shape. Our inflation has spiked up last month, but that's temporary as tomato prices have started coming down. Our growth is little below our potential, but it is still one of the highest among major economies. And we are firmly on our way to become third largest economy from fifth largest economy over next couple of years.
Right. So, Nilesh Bhai, how do we navigate these markets in India? We've seen a fantastic rally over the last 4 months, April to July, and of course there's a bit of profit booking happening in the month of August. How is your asset management company positioned when it comes to cash levels? Where do you see value in the market at current points of strength? And where do you think that the market is still overheated?
So we never take cash call except in funds like balance advantage fund or asset allocation fund where it is mandated. We remain fully invested. Our focus before as well as at today's point of time is to invest in quality businesses available at reasonable prices and most importantly run by management which will respect governance. India is a rising tide. All boats will get lifted thanks to the tide. We just have to ensure that we are not in that boat where there is a hole. Otherwise, it won't get lifted. And there are many companies where governance standards are poor, and hence we consciously avoid them. At this point of time, I believe many SME exchange IPOs, many micro caps, and couple of small and mid caps are trading way above their fundamentals. Either the float is controlled or there is some amount of herd mentality to invest based on some marquee investors' participation. This is one segment where I would like to caution people. Bearing that in large and most of the small and mid cap, one can be an investor, but with a longer term view. We believe India offers 3G growth better than peer group, governance standards superior than peer group, and green transformation with one of the lowest per capita emission of carbon. This combination of 3G, growth, governance, and green will mean that investors would like to buy India. Now, whether they buy it at today's level or little bit lower, that's the concern from a valuation point of view. But we believe investors needs to participate in India growth story on a longer term basis. Like any markets, Indian markets will have its ups and downs. And in the correction, one should be a buyer of Indian equity.
Mr. Shah, I'm so glad that you talked about the India growth story. And we've been hearing one phrase very, very often these days. Everybody seems to believe that this is India's decade. So if I were to ask you, in this decade of India, if an average Indian investor or an average Indian also wants to make the most of India's growth story, what does one really do? How can one really create wealth for themselves in this next decade, which is India's decade?
So this is for an ordinary investor. For an ordinary investor, they have to just do two things. One, regular investment. If you can buy a bunch of portfolio of stocks and do investment over there. If not, equity mutual funds will suffice. And second will be long-term investment. Between regular investment and long-term investment, I think every investor will benefit from India growth story. As I mentioned before, India is a rising tide which will lift every boat as long as there is no hole in it.
Right. Mr. Shah, one more question. Shell already pointed out that, in India in the last 4 weeks, we've been seeing the markets fall week after week and growing pessimism across the world, which is keeping investors even more nervous. But if the markets were to fall even more from here, what would you really buy and what would you advise investors to buy then?
So, since we can't talk about company specific, I will simply say that please buy quality companies. Companies where businesses have some sort of moat. It is run by management which has vision and execution capability. And most importantly, which will respect governance. From a sectoral point of view, we think manufacturing in India is a good theme to bet upon. Many global companies want to diversify their supply base out of China. India, along with other countries, is one of the beneficiaries. And Indian companies which operate and satisfy local market and which has capacity to become part of global supply chain will do extremely well. The other sector which is worth considering is banking and financial services. Normally, financial services grow faster than nominal GDP growth. In India today, we are at a stage where deposit growth is healthy. Credit growth is also healthy as economy is expanding. NPAs are at decadal low level. And the strength of Indian banking system can be judged from the fact that a small bank in India, Shamrao Vittal Cooperative Bank, had to announce when SVB became a crisis that SVB crisis represents Silicon Valley Bank in US and not us. I think when a small bank in India gets impacted by a big bank's failure in US, it just shows how good our banking system is. So banking and manufacturing, if you can find quality companies within that, they'll become your longer term bets.
Absolutely brilliant answer. And Sakshi, I have to relate this to you. Over the last 25 years that I've been speaking to Nilesh Bhai on markets, there comes a specific time in the life cycle of the market, and of course, when we converse, when Nilesh Bhai says, "अपना घर बेच के बाजार में पैसे लगा दो," and I can assure you, it is a fact. Over the last 25 years, it has happened thrice. And I remember each episode very, very clearly. And his timing of the market is phenomenal. You know, people talk about how much time you should spend in the market, which is, of course, one of the cornerstones of great investment and compounding gains. But when to buy, it is one of those very rare qualities even on Dalal Street that you see, and Nilesh Bhai has that in ample measure. Since we are discussing sectors, let's get into one subsector of the banking piece, Nilesh Bhai, which you so rightly mentioned is likely to see growth. And this is a controversial question, we've discussed it many times. On the PSU banking space, the cleanup that has happened, the sharp drop in NPAs, the growth in credit, as well as the balance sheets which are in absolute pink of health, have actually happened more on the PSU banking side than the private side. The private was already very clean. You have often mentioned that buy PSUs when they are absolutely dirt cheap and sell them when they become mildly attractive. Now, given this thermometer that you carry with you, where are we when it comes to the PSU banks?
So I'm happy that this time I'm wrong on PSUs. A lot of PSUs, especially defense PSUs, thanks to the policy change, has gone far ahead of being mildly attractive. This is primarily because of policy change. In defense PSUs, earlier, the orders were given more towards the imported equipments. Now, private players as well as local defense companies are getting opportunity. And more importantly, the budget has also expanded significantly. The same policy change is visible in the PSU bank. Phone banking has come to an end, which is resulting into NPS coming to a decadal low level. And PSU banks have done extremely good job on technology side. I still believe one will have to be stock specific in banks. Globally, we have seen few large players dominating the banking and financial services. In India also, we are witnessing emergence of large players. This is where PSU banks have one negative disadvantage. Whenever merger happens, in many private sector companies, they're able to shed excess manpower and bring down the cost of operation. In PSU bank, that becomes a little bit of handicap. But subject to that, I think PSU banks have done extremely well in cleaning up balance sheet and capturing opportunities. And like defense PSU stocks, they still have a room to go.
Okay. Mr. Shah, we've been asked to ask you some questions in Hindi also for all our Hindi viewers. So I'll ask you that Hindi question now. Since we are talking about the PSU basket, one more space where a lot of PSU stocks are making a lot of buzz is the Indian power space. I remember reading on your Twitter as well. 3 days ago, you had talked about how the power demand is at an all-time high level. And you said there is a need to create a lot more capacities to meet that power demand as well. Help me with your view when you talk about what's really happening in the power space with the changes in policy making, the demand-supply environment, a lot of excitement around these NTPCs, power grids of the world, which had never been among the biggest talking points from most of the analysts for a long time.
So normally, Sakshi, power sector is a utility sector which keeps on compounding your wealth, but never is a multi-bagger. Now, power sector in India for years was trading at subdued valuation, primarily driven by challenges on the distribution side. We have very high transmission and distribution losses. We also have free agriculture power, and we also have problem of very high industrial power cost thanks to subsidy on agriculture power. Now, fundamentally, things have started changing. One, demand has gone up, and we are at our all-time high peak power demand. This is creating interest in power producers. We believe those companies which will have open merchant power position, they'll benefit even more compared to the people who are, having a contractual rate. The second thing is related to transmission and distribution. This sector has been opened up. It has created competition, and a lot of innovations have happened to reduce T&D losses, which has improved transmission and distribution companies' profitability. The third segment where there is a lot of growth opportunities, renewable energy. The government has really pushed hard on renewable energy. We are one of the rare countries in the world which is on its way to achieve COP26 commitments. So power producer, transmission and distribution, and renewable energy, including equipment makers, are benefiting from the government policies. One segment which is now emerging is electronic meter. In a lot of places in India, metering was not appropriate and resulted into higher losses for the power producers. Now, a lot of places secure electronic meters are being installed, and companies which are engaged into distribution will benefit from that. So overall, power sector looks fairly attractive from being a sector trading at a very subdued valuation. It has now started trading at a reasonable valuation. We believe power sector still should be considered as a utility and a compounding rather than a multi-bagger sector. But this compounding could still be in line with the market returns.
Wonderful. Nilesh bhai, let's just take this argument a little further. We are getting a lot of queries on what should one do if one is fortunate to sit on cash at the moment. So imagine you have an allocation of 10 lakhs to do and an absolutely clean slate. Looking at how markets are headed from now on, how would you distribute those 10 lakh rupees on different kind of funds, maybe equity diversified, maybe flexi cap, mid cap, small cap, even an international tadka?
So for someone who has no time available for their asset allocation and who has less interest or knowledge about stock market, I'll recommend that to invest in asset allocation fund. Today, there are many mutual funds which provide asset allocation fund and which divides between equity, debt, and commodities like gold. These are fill it, shut it, forget it kind of fund. If you don't have time and energy, then asset allocation fund is most appropriate. Now, there are many investors which are fairly smart and they keep market watch. For them, I will recommend that if you are conservative, put 70% in large cap funds and 30% in mid cap or small cap funds. If you are an average investor willing to take some risk, then I will recommend 50% large cap and 50% small and mid cap. And if you are very aggressive investors, then maybe 30% large cap fund and 70% small mid cap thematic, including international funds where limits are open. The only recommendation will be don't put all the money at one go. We have from here till May 24 various events, including election, Fed pivot, and corporate results. So try to do systematic transfer plan from here till May 24. And in case you get an opportunity where markets have corrected, you can probably prepone your purchases. But this, a thumb rule should be used for your investment into the market. And please do it on a long-term basis. It's quite possible that today you put first installment and tomorrow markets could go down. Don't get unnerved by small corrections on the way. You are participating for India's growth journey from $3 trillion economy to $7 trillion economy, from fifth largest economy to third largest economy. Some speed breakers and potholes on the road should not detest you from taking the journey.
This is a 3-minute masterclass on how to navigate and invest in such turbulent times, and only Nilesh Bhai could have encapsulated it so well and so precisely. We'll again play that bite sometime later, but for now, let's take the series of questions, Nilesh Bhai, to the new economy. Both of us have been old smokestack stock pickers, and you have very, very rightly mentioned that manufacturing and banking are two spaces where a lot of wealth is even now likely to be created. But we've seen these new age companies correct very, very sharply from what their IPOs were in the 2021 zone, and some of them corrected about 70-75%. Are your portfolios in the mutual funds reflecting purchases of such companies, and how do you see them over the next maybe 2 or 3 years? I'll give you an example. Whenever I go to any commercial shop, I always ask them what is the percentage of digital payments to cash, and now the number has gone up to 50%, at least in Delhi NCR.
So Shelbhai, one thing about this new age company is that they all operate in a field where winner takes it all. If you are number one, you are likely to capture all the benefits, and there's no place for number three or number four or number five. So you have to always pick the winning horse. If you don't pick the winning horse, the losses could be huge. Number two, in order to survive in this kind of cut-filled competition, you will require deep pockets. Either you should have ability to raise capital, or you should have backing from sponsors who will be willing to put money into your company. And third thing, each company will require a path to profitability. Sponsors and markets will be willing to fund your losses for a while, but not indefinitely. Now, between these three characteristics, deep pockets, path to profitability, and winner takes it all, you have to take your bet. We have tested waters by investing into some of the new age companies. We are tracking their performance, and wherever we find that this three combination is available, winner takes it all, deep pockets or access to capital, and a definitive path to profitability, will be happy to increase our positions.
ओके मिस्टर शाह, और अब समय आ चुका है कि हम कुछ व्यूअर्स के क्वेश्चंस भी लेंगे आपके साथ। तो पहला सवाल जो हमारे पास आया है रोहित वी का है, ये ट्विटर से हमारे पास सवाल आया है आपके लिए। वो आपसे जानना चाहते हैं कि एक्सट्रीम लॉन्ग टर्म, मान लीजिए 20-30 साल तक के लिए अगर कोई स्टॉक्स खरीदने हो, तो वो क्या एक वाइज स्टेप होता है आज के स्टेज में, जब टेक्नोलॉजी चेंजेस इतने ज़्यादा हो रहे हैं, पॉलिसी चेंजेस इतने ज़्यादा हैं, और कंप्लायंस रिलेटेड इश्यूज़ कब आ जाए वो बिल्कुल अनप्रेडिक्टेबल है। तो ऐसे में लंबे समय तक के लिए स्टॉक्स को होल्ड करना कितना सही रहेगा?
रोहित भाई, जब आप टेस्ट मैच में खेलने उतरते हैं तो आप हमेशा लंबी इनिंग की सोचते हैं। अब ऑब्वियसली गेंद कभी तेज आती है, कभी स्पिन आती है, कभी बाउंसर आती है, कभी यॉर्कर आती है, कभी पिच भी बदलती है। सुबह की पिच पे ऑन्स ज्यादा रहती है तो स्विंग करती है, दोपहर की पिच थोड़ी स्विंग करती होगी, स्पिन करती होगी। सो आप अपनी इनिंग तो लॉन्ग टर्म के लिए ही खेलते हैं, और जैसे पिच बिहेव करती है, जैसे गेंद आती है, उस हिसाब से रन बनाने की कोशिश करते हैं। तो आप इन्वेस्ट स्टॉक में लॉन्ग टर्म व्यू से करिए, बट उसका मतलब ये नहीं है कि आप गेंद के ऊपर से नजर हटा दें। आपको हर समय इन सारे फैक्टर्स का एनालिसिस करना पड़ेगा और फिर उस एनालिसिस के हिसाब से अगर कुछ एडजस्टमेंट करना है तो वो भी करना पड़ेगा।
जी, एक और सवाल ले लेते हैं, उसके बाद हम बाकी अपने सवाल भी पूछेंगे आपसे। ये जो सवाल आया है ये दुबई से शोएब कलत्रा जी का है। वो आपसे जानना चाहते हैं कि कौन से क्षेत्र में, कौन से सेक्टर में वो निवेश कर सकते हैं लॉन्ग टर्म में। हम जानते हैं कि आपने दो थीम्स तो हमें बताई हैं, एक तो मैन्युफैक्चरिंग और बैंकिंग। इसके अलावा अगर आप कोई सेक्टर उनको बता पाएँ लंबे समय के लिए।
शोएब, एक सेक्टर जो बहुत लंबे अरसे के लिए देखना चाहिए वो फार्मा सेक्टर है।
अरे वाह।
दुनिया एज कर रही है, बहुत सारे देश दुनिया में ओल्ड एज पॉपुलेशन को इंक्रीज करते हुए देख रहे हैं। यूएस और यूके जैसे देशों में 1/3 से ज्यादा डॉक्टर हिंदुस्तानी ओरिजिन के हैं। एंड ये हमने तब किया जब भारत में टोटल मेडिकल सीट्स 50,000 के आसपास थी। अब 1 लाख से ज्यादा मेडिकल सीट्स है, तो हम और देशों को और अपने देश को भी डॉक्टर्स की सप्लाई कर पाएंगे। अमेरिकन लोग जो मेडिसिन कंज्यूम करते हैं, 45% से ज्यादा मेडिसिन का वॉल्यूम मेड इन इंडिया है। आज दूसरे देशों के अनफंडेड हेल्थ केयर प्लान्स में अनफंडिंग का जब इश्यू आएगा, तब वह भी इंडियन जेनेरिक मेडिसिन देखेंगे और हमारी मार्केट, जेनेरिक मार्केट जो आज अमेरिका में है और कुछ देशों में है, वो पूरे विश्व में फैल जाएगी। तीसरा और मोस्ट इम्पॉर्टेंट चीज है कॉस्ट ऑफ हेल्थ केयर डिलीवरी। एक रूट कैनल आप ब्रिटेन में करेंगे तो 1,000 से 1,500 पाउंड का खर्चा है, भारत में वो करेंगे तो 5 से 15,000 रुपए में वो हो जाएगा। हमारी कॉस्ट ऑफ डिलीवरी दूसरे देशों के सामने बहुत कम है और क्वालिटी ऑलमोस्ट सेम है। अब ये सारी चीजों को आप जमा कर लीजिए, एजिंग सोसाइटी, नीड फॉर चीपर मेडिसिन, expertise of Indian doctors, pharma manufacturers, and at a cost which is cheaper than the world. ये सारी चीजों को कंबाइन करे तो जैसे टेक इंडस्ट्री में भारत का प्रभुत्व हुआ, वैसे ही फार्मा इंडस्ट्री में भारत का प्रभुत्व आने वाले 15-20 सालों के लिए रहेगा। और इस क्षेत्र में आप उस प्रकार का व्यू लेके निवेश कर सकते हैं।
क्या ज़बरदस्त जवाब था। और ये मेरा अगला प्रश्न होने वाला था, लेकिन जैसा कि मैंने आपको बताया, नीलेश जी पहले ही भांप लेते हैं कि आपको क्या पूछना है और उसका जवाब उनके पास हमेशा तैयार रहता है। नीलेश भाई, वन ऑफ द कॉर्नरस्टोन्स ऑफ द लास्ट 3 decades fantastic bull run that we've seen in India is the software and IT sector, which surprisingly is trading at mediocre, less than average valuations of the last 10 years at a time when rupee is at an all-time low. Now, why is there such a dichotomy in the market when all of us know from experience that whenever there is a recession or problem in the US, the biggest beneficiary is India's export-oriented software sector? Are you looking at it from the point of view of stock picking for the medium to long term?
तो शैल भाई, रुपया है ना, वो हमारी उम्र की तरह है, हमेशा ऑल टाइम, जैसे उम्र हमेशा ऑल टाइम हाई है, ज्यादातर रुपया ऑल टाइम लो लेवल पे ही रहेगा, बिकॉज उससे सालाना 2 से 3% डिप्रिशिएट होना जरूरी है टू मेंटेन इट्स ट्रेड कॉम्पिटिटिवनेस। आईटी क्षेत्र में आजकल 2 चैलेंज है। नियर टर्म में ये चैलेंज है कि अमेरिकन इकोनॉमी कब रिसेशन में जाएगी, फेड जो हायर इंटरेस्ट रेट्स फॉर लॉन्गर की पॉलिसी इख्तियार कर रहा है, उसकी क्या इम्पैक्ट आएगी। तो सेकंड एंड द बिगर चैलेंज इज द आर्टिफिशियल इंटेलिजेंस। In the work done by Indian programmers and coders be replicated by artificial intelligence. We believe Indian IT sector provides an attractive opportunity, provided you can identify those companies which are going to leverage artificial intelligence to provide better solutions to their customers. They will audit what AI is throwing out. They will build what is needed for AI in a closed loop so that your data secrecy is maintained. They will probably also provide tools and mechanisms so that you are secured against artificial intelligence usage by your competitors and peers. Artificial intelligence is giving a new line, a new tool in the hands of efficient managers. So those Indian companies which can leverage AI to deliver cheaper, competitive, better solutions to their client, they'll be the winner in the race. As of today, सारी companies यही कह रही है कि we are using AI. We have to find out as an investor which one is using AI better than their competitors.
Right, that's a fairly good point. Nilesh bhai, the other part that the markets are really worried about is, the fiscal issue that we just might face because of higher inflation and the government's obviously budgeting for the next half of the year ahead of the inflation. I'm so sorry, ahead of the national elections. How do you see the broader balance sheet of the country till about May 2024? And are there any pitfalls or pains which might come in?
So far the tax collections have been ahead or in line with the estimate, and expenditures have been well provided in the budget. Many off-budget items like food and fertilizer subsidy has been accommodated in the budget. Undoubtedly, India has elevated fiscal deficit, but that's the trend globally. The good part is that a large part of this deficit is today going towards creation of capital assets. This year's fiscal deficit is estimated about 11.5 lakh crore, and the capital expenditure of central government is expected to be about 10 lakh crore. As long as we are using deficit for creating assets and not burdening future generation, we should be fine. In fact, if we look at from subprime crisis to COVID crisis between 2008 to 2022, the only major economy in the world which has improved its debt to GDP ratio is India. Compared to 2008, our debt to GDP ratio is lower today. And if we can maintain that trend where debt is used for capital asset and we continue to improve as a country our debt to GDP ratio, we should be in a fine step.
Okay. Nilesh sir, let's ask some more questions from our viewers that they have sent us. The next question has come in from WhatsApp, our WhatsApp number, and Ramesh Ramashankar has asked you this. Should I really invest in PSU stocks or is it just a hype? What is your take for the short or the medium term?
So Ramesh bhai, PSU stocks are not a hype anymore. There has been policy changes which has positively impacted PSU stocks. And I think a diversified portfolio of PSU stocks can be.
Okay. Another question that has come in is again from WhatsApp. Dr. Abhiram Pendekar has asked us this question. He wants to know from you what exactly is margin of safety. He keeps on hearing everywhere. Market experts keep telling you look for margin of safety. So what exactly is margin of safety and how do you find it?
So Dr. Abhiramji, first of all, very, very thanks to the noble profession which you are doing. You save people's life. You provide health to people. Now, let's suppose if someone comes to you who is unhealthy because he or she is eating a lot of junk food, you will immediately, give them some medicine if there's need to control blood pressure or cholesterol or something like that. But then you will also push towards healthy lifestyle, avoid eating junk food, exercise. You will try to remove not just the symptoms, but the cause. When you give medicine and when you provide a roadmap to healthy lifestyle, that's the margin of safety in equity market. Companies trade around their fair value. When they start trading below their fair value, then there is margin of safety. When will margin of safety come? It will always come when there is uncertainty. For example, in March 20, margin of safety came in almost all the stocks. Because of COVID, people were worried about the future. But you as medical practitioner would have believed that finally mankind will figure out what will be solution for COVID, and these companies will not always suffer. They'll bounce back. So margin of safety is the margin which is available to you as an investor when stocks trade below their fair value. And generally that happens when there is uncertainty or an event.
क्या बात है. Today, not only are we having a class on how to pick quality stocks, but how to make money on the longer term is also on Nilesh bhai's radar, and I'm sure he's had a fantastic breakfast. That's why we are having such fabulous answers coming in from Nilesh ji. नीलेश भाई, एक और काफ़ी बाज़ार में बात होती है that over the time India's per capita consumption will rise beyond $2,500 per person per year, and from then on a different kind of India will emerge on the stock markets, on our shopping malls, on our monthly budgets that we spend either on food or on discretionary income expenses. When you look at this specific segment, what are the 2 or 3 sectors that come to your mind for long-term investment? For instance, there are many companies, large companies which control monopoly market percentage shares, maybe in the aviation space, maybe in the FMCG business. So how does your valuation metric, and how do you see these changes happening?
So Shalbhai, when per capita income crosses, let's say $2,000, which we have already crossed, then expenditure starts shifting roti, kapda, makan, the basic necessities of life, to comfort, which will be education, entertainment, healthcare, travel and tourism, and so on and so forth. There will be also shift from, let's say, mass market product to premium products. Now, India is at $2,650 per capita GDP. Undoubtedly, there are multiple Indias. One part of India is as rich as France, but that's minuscule. The middle part of India is having on a purchasing power parity basis as much per capita GDP as Indonesia, and it's growing. And a large portion of India is still sub-Saharan Africa level. Obviously, there is upward mobility from sub-Saharan Africa to Indonesia and Indonesia to France. Now, in the stock market, we are more focused towards companies which are catering to the rich and the middle class rather than the poor class alone. We are focusing on companies which are engaged where incremental spendings will continue to increase. That is premiumization, that is entertainment, education, healthcare, and travel and tourism. But these are all broad themes. Within travel and tourism, or entertainment, or healthcare, or education, you have to find out companies where path to profitability is there, where governance is there. In aviation industry, we have seen, bearing one exception, almost all the things have been a failure. So while you are looking at the top-down trend, we'll have to be careful on a bottom-up basis to figure out which companies will survive in the longer term.
Okay, that's a very interesting thought to have. Nilesh bhai, normally, such is the enthusiasm about markets these days, whether you go to Bandra Kurla complex or Nariman Point in Mumbai or to Connaught Place in Delhi, everybody seems to be invested and actually in some small pockets of small caps and mid caps invested and overextended. What are the 2 or 3 things which you feel that might spoil this wonderful party that we are having in India and on Dalal Street?
So one, people are investing with expectations on India. They are paying higher premium to us compared to our peers. In some sense, we are like Virat Kohli or Rohit Sharma. People expect us to deliver, people expect us to perform. if we don't deliver up to their expectations, the party will be spoiled. As I mentioned before, the 3G of growth, governance, and green are non-negotiable. There could be a delay of 3 months here or there, but the direction should be in that sense. So we have to meet expectations of investors. From an event point of view, Fed pivot will be critical for market. Today, US markets are expecting Fed to cut rates by middle of 24. If that gets delayed, there will be some consequences for Indian market. The second will be election 24. Market today is expecting a reform-oriented government. Any deviation there could have material impact on our market. The third is obviously the corporate performance. Market is expecting about 12 to 15% earnings growth for FY24 as well as FY25. The first quarter numbers have come reasonably as per expectation. The same should continue.
Okay, Mr. Shah, let's quickly take one or two questions from our viewers again. The next question has come in from Mohan Sharma from Ghaziabad. He wants to ask you, do you see froth in the market in any pocket, and where would you advise us to stay away from right now?
Mohan bhai, there is a froth in the market, especially in small and micro caps. There are many companies where floating stock is controlled or where some marquee investors have invested and people are investing through herd mentality there. There are few stocks which are being recommended on social media, and that is also resulting into circular trading, stroke herd mentality buying. So my recommendation will be to invest only after doing your research. Please don't invest based on some tip which you get in social media or otherwise. Try to buy companies around their fair value. The whole market is trading around its fair value, so you're not likely to get anything cheap, but don't buy anything too expensive either.
Okay, I hope Mr. Sharma you got your answer right there. Another one has come in from Meerut. Raghav Singh wants to ask you, sir, in markets there are thousands and thousands of stocks. How does one select that 25, 30 best stocks for one's portfolio? If you could give us your secret formula too.
श्योर राघव पर आप मेरठ जब घर से बाहर निकलते हैं तो हजारों दुकानें होगी जहां से आप खरीदारी कर सकते हैं, बट आप हर दुकान में जाके तो खरीदारी नहीं करते, हर रेस्टोरेंट में जाके तो खाना नहीं खाते, हर डॉक्टर के पास जाके आप अपनी मेडिकल एडवाइस नहीं लेते. आप कैसे डिसाइड करते हैं किस शॉप से खरीदना? एक है कि आप पहले छोटी मोटी खरीदारी करके उसका एक्सपीरियंस लेते हैं और जब आपको लगे कि ये दुकानदार आपसे चोरी नहीं करता तब आप उसके साथ और खरीदारी करते हैं. दूसरा है कि आप किसी से एडवाइस लेते हैं, कोई आपके रिलेटिव्स है, आपके बुजुर्ग है, उनसे पूछते हैं ये डॉक्टर अच्छा है, ये रेस्टोरेंट अच्छा है, ये दुकानदार अच्छा है. सो एक है अपने अनुभव पे जाइए, दूसरा है दूसरों के अनुभव के ऊपर जाइए. सेम चीज स्टॉक मार्केट में है. पिछले का ट्रैक रिकॉर्ड देखिए, 2 लोगों से पूछिए, थोड़ी अपनी रिसर्च करिए, ऑटोमेटिकली ये 7,000 कंपनी में से आपका निवेश का जो सर्कल है वो 100-150 कंपनी से ज्यादा नहीं रहेगा.
क्या बात है. तो इस तरीके से आप छटनी कर सकती हैं कंपनीज की. आसपास पूछिए, बैलेंस शीट्स पढ़िए, 15, 20, 25 साल की परफॉर्मेंस देखिए और जहां पर आपको कंसिस्टेंसी दिखे वहां पर अगर स्टॉक प्राइसेस करेक्ट कर चुके हैं ऑल टाइम हाई से तो आप ख़रीदारी कर सकते हैं. नीलेश भाई, फाइनल क्वेश्चन टू यू is on one sector that you've been tracking for a very long time but somehow is getting missed out, and that is the cement space. We've seen a lot of mergers and acquisitions happening in the top rung cement companies as well as now in the mid cap space. How do you see this sector? Are there any multi-baggers hiding in this one? I ask this for two reasons. One, you mentioned manufacturing, and anything that has a manufacturing label to it will have cement as an input. Plus the capex cycle in India is really expanding fairly well. How do you watch cement given these two in the background?
So So, Shalbhai, I still believe cement is a compounding sector rather than multi-bagger sector. Consolidation is good for cement industry from an investor point of view. Today, there are 4 or 5 large players which are virtually controlling the entire industry. Second thing, as you mentioned very correctly, government is spending on infrastructure. And ahead of election, there will be propensity to execute things at a faster pace. Private sector capex is also taking off, and China plus one also will result into bigger and better companies coming to set up their shops in India. Between private sector capex and government's infrastructure push, cement should do well. The other thing is housing. I mean, clearly, in many places now, housing is moving up the value chain. From kache pakke jhopadi, we are now going towards well-built houses. That also will result into demand for cement. Consolidated industry, reasonably good demand, no threat of imports. Put all these things together, cement will become a compounding sector. And more importantly, in cement today, efficiency has started picking up a lot, whether it's energy consumption, whether it's transportation and logistics. It is benefiting from the infrastructure which has already been created. Put all these things together, cement may not be a multi-bagger sector, but certainly it will continue to compound your portfolio at a rate ahead of the market.
Wonderful, Nilesh bhai. It's been a fantastic 45 minutes. You've spent considerable amount of cerebral space from global inflation to cement companies, from internet plays to how to construct portfolios and how to look at well-owned stocks. Thank you so much for your time. It was such a pleasure hosting you, and I hope we make this as a regular feature. Thank you very much.
Thank you.
Thank you, sir.
So that's it, ladies and gentlemen. Our show with Market Masters. Today's guest was Mr. Nilesh Shah. He's the Managing Director of Kotak Asset Management Company, and he spoke on a whole host of sectors, stocks, as well as how to construct your portfolios, and if you are a beginner, on how to start investing in markets. We'll be having small chunks of all these answers available on our website. Please do log in, and of course this is a regular feature. Please send us questions on which you seek answers, and we'll try our best to have them answered from the best that there is in market. Thank you all for spending time with us. From Sakshi and me and our team, goodbye.
In yet another sure sign of the deepening real estate crisis in China, property